Let's get on board now the management of Greenply that reported its Q3 numbers. Manoj Tulsian, Joint Managing Director and CEO, Greenply Industries, is now joining us. Hi, Mr. Tulsian. Thank you so much for taking the time out and joining us today. The company's profit has declined in Q3 on a year-on-year basis. I can see it's a decline of 9.3% at 24 crores versus 26 crores on a year-on-year basis. Tell us what led to this decline. Do you expect this momentum to continue?
So, Q3 profits if you are looking at the PAT, it's also because of the joint venture on the Greenply Summit, which has just been under the incubation, and there has been a loss as per the budget only. But going forward, of course, that loss will also come down when you are looking at the PAT level. Last 4 years, we all know that the raw material prices have only moved up, and the whole of the industry have not been able to pass on that entire increase to the market. So that has also been a reason that with the raw material cost increase which takes place, the whole of that has not been passed on to the market. But when you look at Q4 and going forward, I think the scenario is extremely positive from my point of view. Q4, because the volume growth would be much better. So there will be an operating leverage which will be playing. We have taken a price increase in Q3, and we are also taking a price increase in Q4. So keeping all these things in mind, the margin profiles will improve. On the MDF business, also in Q3, we had a shutdown. So because of that reason, we were not able to optimize our production and hence the sales. So because of that also, the operating leverage could not really play. So that also will come back in Q4.
Okay, Mr. Tulsian, if you take a look at your margins on a year-on-year basis, they've been rather flat. Could you help us with your margin guidance for the last quarter of this year and also for the next financial year?
For the plywood business, we are looking at double-digit margin, and for the MDF business, we are looking at a margin around 15 to 16%. For the coming year, for sure, though we are doing our budgeting and everything, but for the coming year, we definitely see that the margin profile in both this business segment, in plywood as well as MDF, will be much better than this year's margin profile.
Right, Mr. Tulsian, how was the volume growth from both segment in Q3, and going forward, what is your guidance for volume growth?
For this year, in Q3, the volume growth in the plywood business was very muted. It's around 2.7% odd. We could have done much better, but we definitely felt the pressure of liquidity into the market, and we could see that collections were a clear sign that there is a pressure in liquidity. In fact, even from dealers who have been paying us for donkey years on time, where some were delaying their payment from the due date. So that was clearly a sign that there is a pressure on liquidity more than on the demand. And I believe that with the measures what even RBI has taken, and this is going to improve. And once this improves, the demand scenario will also change. Also, one important point, when we look at some lead indicators on the real estate residential units, when you look at some data point, around 3 years back, the sale of luxury and ultra luxury as a percentage of the total volume sales of residential units was only around 10%. Now that has moved to almost around 30%. So these are very good signs for organized players like us. So I think the demand scenario going forward is going to improve only. So is the margins.
Okay, also help us understand what is the capacity expansion plan going forward. What's the outlook on that front?
Just announced our new investments in Odisha, which is setting up a plywood plant, which will be for a total estimated cost of around 134 odd crores. And that will bring in a new capacity of almost 13.5 million square meter, which is a 25% increase of my present capacity. Right now, we are utilizing in plywood around 80 to 83%, which by the year end should be somewhere around 85-86% of the capacity utilization. So we are preparing ourselves for FY27 and beyond. As I said that, because of the implementation of the BI standards, Second, also we feel somewhere that the prices of timbers will ease out maybe sometime in FY26, later part of FY26. So that also will be a big boost in terms of the demand side.
Right, Mr. Tulsi, and also can you give us an update on the future hardware JV between Greenply and Summit? What is the growth you are expecting from this JV? Can you provide some more details on this JV?
First of all, this JV slightly in terms of our implementation timelines, a few things got delayed. As of now, when we speak, we have almost there has been a delay which we have witnessed for 4 to 6 months, uh, because of which the entire sales plan for this year has actually got pushed. Uh, this month, in fact, last month was the first month when we were able to completely produce as per our phase one plan of investments. And this month we are having our dealer meets and we are going to showcase all our products. We have also done a few exhibitions in the last quarter, and there we got very exciting response from the dealers. So we are hoping that this coming financial year we'll get a full 12-month period to go to the market and do our complete sales. Expecting a revenue of anything between 80 to 100 crore is very, very ballpark right now at this point of time. We'll do our budgeting and then we'll come back. Also, after this dealer meet, we'll get a much better sense in terms of how they are liking and what type of order traction we can expect in the near term. But the business is very, very exciting. We feel that this is one business which can be scaled up to anything around 500 crores in the next 3 to 4 years. And the margins are very, very healthy in this business. So at 500 crores, we can reach a margin of more than 25% in this business.
Okay, Mr. Tulsian, point taken. On that note, we'll let you go. Thank you so much for joining us on ET Now.